Before we get into that, I want to bring in our next guest, Jenny Horne, markets correspondent. We want to dive into breaking numbers we have on the jobs report. We just got data from the Labor Department showing that the economy grew by only 12,000 jobs in October. The unemployment rate held steady at 4.1%. Jenny, let's dive right into these numbers. What do you make of this?
Yeah, I will say I think that this is interesting. I think that unemployment being raised substantially is huge, but I do think that this number, we were saying, like, what's the balance here of like the macro versus right now a lot of the micro situation, but I think that this jobs report right now showing us in real time that there is still a degree of slowing ahead of the expectation. I mean, expectation called for around 80 to 110,000 drag on monthly payrolls, so we were well off. But I will say that, again, we've had strong economic data all week. I wouldn't take this as perhaps doom and gloom. Initial reactions this morning is that the direction of the labor market still remains, I think, up for debate among those that are like supporters or critics of Jerome Powell and the Fed's direction as of late.
Yeah, but it is. I mean, this is a sharp change in direction when you think about the path of the job market this year. And look, this is the first report because in the last report, September, we did wonder if there was going to be some hurricane impact. This report, the Labor Department saying you are seeing impact from Hurricanes Helene and Milton. They said, quote, October data from the household and establishment surveys are the first collected since those hurricanes struck the United States. Those hurricanes caused severe damage in the southeast portion of the country. We know that. We saw that in many of the pictures coming from those regions. So this is the first data showing that. They also mentioned in this report that you're seeing some effect from strike activity. So we talked about that. We'd been wondering when that would come in terms of this report. But I think you make a great point about what the establishment survey looks like. We know there's two different surveys that are collected here. We've got the employer side and we've got the household side when they call up. I don't know if they actually literally do phone calls nowadays. Maybe they still do that part old school and say, you know, do you have a job, et cetera. And with that holding at 4.1%, I feel like that is a positive, that side of it, right, Jenny?
I do. I will say that versus, I mean, it was in line with what we saw last month. Also was in line exactly with expectations. So I don't think you can read into the 4.1 as a bad thing because it was exactly what we were bracing for. But I do think there's still those that are critics. And I was just reading on X this morning, those that are reacting here in real time. And that seems to be the biggest point of contention, even though it was exactly, again, what we've been expecting. So I think because the Fed was so heavily focused on lowering that unemployment rate, I mean, it was part of their narrative throughout the entire last Fed meeting we saw. So I think for that reason, there's the expectation that could maybe come down quicker than it is. And there's an impatience right now regarding the unemployment rate. But yeah, I would say that all things considered, that is, I mean, objectively exactly in line. That's not a weak spot at all. However, adding far less jobs than expected. I mean, 12,000, if you look at a chart, we are like in a major dip from where we've been historically.
Yeah. Yeah, and I mean, the labor force participation rate looks like it's holding pretty steady when you compare that to the previous month, because last month it was 62.7%, now 62.6%. Anything else that you're taking away from these latest numbers, Jenny?
I will say, I mean, hourly earnings beat with about 0.4% on a month-over-month basis. That's maybe one thing to look at, as well as, I mean, overall, I think the jobs print at this point, there's a lot of heavy attention on this figure, but I think it's far too soon to say the Fed will continue to like cut rates at their pace or not. And I'm reading some of the overall basically statistics about what people think the Fed will do. I think it's way too soon to say that. I think we need more data to tell us that. But yeah, this is a pretty, I'd say, shocking figure. I can't remember, we saw 12,000 jobs added. That's pretty low for the month. But again, hurricane turbulence, also seasonality. There's a lot of factors that go into this report. I don't think this means the Fed has to up and change their direction anytime soon.
Yeah, well, I doubt the Fed will change. I mean, I think one of the things that we were wondering coming into this is if the print was stronger than expected, could that change the Fed's direction, especially when you think about inflation and how PCE came in. To me, this is a clear signal that the Fed is not going to change its direction and will continue on this rate cutting path that they indicated from their previous meeting and even based on what the dot plot looks like. Jenny, any final thoughts?
I totally agree with that. I think that there was a week about a few weeks ago when we had like hot CPI and hot PPI that came in. Everyone started saying the Fed would do something differently, and I do not think that would be the case for this figure. I agree. If maybe we had blown past expectations, I mean, adding well more than expected, that would maybe be the concern. But I think everyone tries to make something of these numbers, and I think that they're important, no doubt, but also it's just a monthly figure, and there's a major component being like a hurricane, for example, that could be also impacting this specific jobs figure for this month.
All right, Jenny Horne, we'll have to leave it there. Jenny Horne, markets correspondent here on the Schwab Network.